Absolute Wealth. Real investors, real results.
Hi everybody, this is James R. Gorrie, Managing Editor of Absolute Wealth, with another edition of The Good, the Bad, and the Gorrie, where I give you some good news and some bad news in the economy and tell you what it means. All right, according to Bloomberg TV, there's some good news out there, and that good news is that U.S. corporate earnings are up. In fact, they've been trending upward the past year or two, which is great news when you consider that the rest of the major regions in the world, the Eurozone, China, even the emerging markets, are all trending downward. So that is a big deal. Okay, you got to count your victories. It's a tough global economy. You've got to recognize the good news when it's there and build upon that. Okay, so that's the good news. What's the bad news? Well, the bad news relates directly to the good news. And again, why do I do this? Because it provides context. It gives us a way of seeing what that good news really means and what the bad news really means. So the bad news is that corporate revenues in America are down. And this is not just S&P 500 corporate revenues, but also small business index revenues. So what does that mean? On the one hand, you have rising earnings and trending upward past a year or two. On the other hand, we have flat and falling revenues. Why? How do you have both of those? Well, here's what it means. Earnings are not just derived from sales. They are derived from sales, but there's more to it than that. There's also production costs, and labor costs have been trending downward. And as labor is let go or it's acquired for less, hey, you've got yourself a better margin. So that's part of it. And there's also automation and so forth, and a lot of things like that. And finally, when we also break it down in terms of earnings per share, in terms of the S&P 500 corporate earnings, if we take out financial services from that equation, from that calculation, we'll find that corporate earnings in America are actually flat or slightly negative. So that trend goes away. So what's the takeaway from that? Well, the reality is the financial services have benefited greatly from what? The Federal Reserve, pumping a lot of money into them for the past 2 or 3 years. That's where those earnings are coming from, okay? As well as from the stock market benefiting from all that, excuse me, from all that revenue and from all that money. So if we take out that Federal Reserve factor, we're going to find that earnings and revenues pretty much look like the rest of the world, flat, falling, not trending so well. So is our corporate earnings a good thing? Yes, they are. It certainly doesn't hurt us, but looking at the source of it and why it's there certainly puts it into context. So there it is, the good, the bad, and the Gorrie for this week. I'll see you next week. I'm James Gorrie, Managing Editor of Absolute Wealth. Bye-bye.
Nom 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 nom. I need that.